the Fed keeps rates stable and the dot plot is unchanged.
Yeah, so the Federal Reserve concluded their March meeting. They have 2-day meetings. They do that, I think, 10 times a year. And unsurprisingly, they kept the Fed funds rate unchanged. This is something that would have been a surprise just a few months ago. Now, for anybody who's been watching the show for the last few months, I've been saying there is no way in the world the Fed was going to cut in January. I said there was no way they were going to cut in March, and that we were not going to see 6 interest rate decreases this year for a total of 1.5%. So far, we've been right. The market has adjusted in our direction on that. And the Federal Reserve did what we expected. They kept the Fed funds rate the same. It's now at 5.3%. And the interesting part of the release was the dot plot. Now, the dot plot is what comes out. It comes out 4 times a year. And they ask every member, every Fed governor, to plot out where they think interest rates will be this year, next year, the year after, and then in the long run. And the reason the dot plot is interesting is because you can see the Fed vote is always unanimous, but you can see where there are people saying, hey, we don't think we're going to cut it all this year. And there were other people saying, no, we think we're going to cut 4 times or 5 times. And you can see this range of opinions. And it's the one place where the Federal Reserve, which typically speaks with one voice, it's the one place where they actually let us see a divergence in opinion. And so this week, the dot plot came out, and it showed that the majority of Fed governors thought we'd have 3 interest rate decreases. That's consistent with what we saw last time. And the market breathed a sigh of relief because they thought we were potentially only going to get 1 or 2 decreases, right? That the Fed was becoming more hawkish. Instead, they said, no, we're going to keep things pretty much the same. And the market had a relief rally and was up. The release came out at 2 o'clock, and by 2:03, the market was up. People were looking at the dot plot before they were reading the release.
Gary, during the press conference, appeared to be some contradictory statements in there regarding the rate cuts. One implying cuts when inflation's back down to 2%, but another before that. What did you make of this political theater drama? What was it?
Yeah, so Rob, that wasn't so much during the press conference, although Powell's press conferences are hilarious in their own way. We forgot to say this week's episode is the economic hilarity episode. And basically what happens is Powell stands in front of the press for an hour. Every single person asks him some different version of the same question, which is, when are you going to lower rates? And Powell, you can see him desperately trying to not look annoyed and not trying to be snarky and say, what is wrong with you idiots? I've answered this 15 times today for the 16th time. We're data-driven. I don't know when we're going to lower rates. But there was some very interesting language in the press release. And this is what we were focused on. And so I'm looking for the exact language. So at one point, the press release said the Fed would cut when it had greater confidence inflation was moving towards the 2% target. Okay. Now, this is going to sound like nitpicking, but I assure you, the Fed goes over every single word of these releases. The finance community goes through every single word of these releases. The Fed knows that we all have comparisons. This is what they said last time. This is what they said this time. And we are looking at every change of words. So we can assume that every word they put in there is meaningful. And so when they say greater confidence inflation was moving towards the 2% target, what that means is they're prepared to lower rates before inflation hits 2%, right? And so you see that and you think, wait a minute, these guys are shifting the inflation target. Maybe they'll do it at 3%, at 2.5%. And this, by the way, is the same thing Arthur Burns did in the 1970s that led to massive inflation. He let off too early. He let off when inflation was heading towards the target. Now here's the Fed saying, yeah, we're considering doing the exact same thing. And I assure you, every person in the room knows that story. They know that history. But then just a sentence later, it says that they are, here it is. I'm quoting from the release. The committee is strongly committed to returning inflation to its 2% objective. That is drawing a hard line, very hawkish, right? We're going to get you to 2% on inflation, and we will not let up until it happens. Now, why would they do this? Right? Why, in one sense, would they say, hey, we'll ease up when it's on the way, we're making progress? And the other one, they're saying, this is the target, this is what we're going for. And the answer is this opacity, this saying one thing, saying something else is deliberately in there so that later they have a variety of options they can consider. And no matter what, like, yeah, we told you we were going to do this, right? It's kind of like, asking if there will be dessert after dinner, and, mom and dad say, there might be dessert, there is dessert, there might not be dessert, we're not sure. And then whatever happens, like, yeah, we told you.
The spin zone, I think you can call it.
Exactly.
Great. Gary, thing number 3,